Hello traders, Gary Wagner here. Approximately 12:30 in Honolulu, 5:30 in New York. It is Monday, 8th day of February 2021, and this is the daily report for gold and silver. Gold and silver stage a continuation of the rally which began on Friday. That, of course, occurred primarily due to two events, and that is the budget resolution, which the Senate passed 51-50, as well as a fairly weak jobs report with an estimate of about 85,000 new jobs and the actual number coming in at 49,000. We saw gold in double digits, silver in double digits, and that was without any aid from a weaker U.S. dollar, as the dollar only had fractional declines. We'll talk about the identification of a couple of patterns in gold specifically and why we believe that it is right to trigger a buy alert in gold and silver. Take a look. Today we saw a continuation of the rally which began on Friday. This occurred after a jobs report indicated a slowing economical growth, and we saw the Senate pass a budget resolution with Democrats only, which really opened the path for President Biden's $1.9 trillion fiscal stimulus package. That was viewed as extremely bullish for not only the precious metals, but for U.S. equities, with the three major indexes closing at all-time record highs. That's the NASDAQ, the Dow Jones Industrial, as well as the S&P 500. Gold had a respectable gain of well over 1%, gaining $19.20 and closing at $1,832.20. Spot gold also had a very nice gain, currently fixed at $1,831 and change. We have identified two distinct key reversal patterns in both spot gold as well as gold futures. We are looking at a daily candlestick chart of spot gold, and what you can see is that after the dramatic decline on Thursday, that's this large red candle here, the market opened below its opening price of Friday. That would be the bottom of this green candle, and closed solidly at or above the midpoint. That creates a two-day pattern called a piercing line. But as in all simple candlestick patterns, we wait for a confirming candle, and we certainly saw that today with this defined action: higher high, higher low, and higher close than the previous day. We are looking at a daily chart of gold futures. This bases the most active April contract. And what we can see is that we have identified a variation off of a bullish harami. And the reason I'm calling it a variation is typically you get a smaller bodied candle than this, but it is an inside trading day with the close occurring around the midpoint of the decline that we saw on Thursday. And today we definitely had a confirming candle in this also, which is a higher high, a higher low, and a higher close on the day. This will certainly trigger a buy signal in gold futures and gold forex. We will send out a trade alert accordingly so that those subscribers who wish to can take positions as it opens in Australia in just a few hours. Lastly, I want to take a look at the moving averages of both spot gold as well as gold futures. What we can see is that when we look at the shortest term 50-day moving average, it was coming exceedingly close to crossing, which would have formed the purest form of a death cross. When the 50-day moving average crosses below the 200, you can see that hooking up here. And that is in relation to the last two trading days in which we've seen a trade off of these lows here and move to resistance at $1,840 per ounce. That is the high in spot gold. When we look at gold futures, we have the same kind of thing where you can see a little hook up, and although it came much closer to forming that death cross, if we get a continuation of this rally, we will also see these two begin to move apart, creating a wider space between the 250-day moving averages. Silver futures basis the most active March contract, gained almost 1.5% today, gaining 39 cents, and is currently fixed at $27.41.5. We are looking at a daily chart of silver futures. Silver gained almost 1.5% today, currently fixed at $27.42. This is basis the most active March contract, and although a candlestick pattern cannot be identified over the last couple of trading days, what we have seen is the golden cross that occurred at the end of January, and we saw the market really clip higher, trading and testing $30 per ounce before falling lower, creating a higher low than the previous low and a higher high than the previous high. And that is very bullish for silver. We will include that on our trade alert that we send out. And another noteworthy aspect of today's gains in the precious metals overall is that it occurred with very, very mild fractional dollar weakness. You can see this on the daily candlestick chart, in which we had the market open and close roughly at the same point, creating a doji. And that was following a dramatic decline that occurred on Friday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.